What is up? What is going on, everyone? Welcome to the very first episode of the Deal Makers Club. And I have a treat for you all today. 2026 is going to be a great year for real estate investors. And the Deal Makers Club is where we bring on great operators, great brokers, great qualified intermediaries, and everyone that's serving and operating the real estate space and how they are making deals happen. So I am super excited about 2026 and all of the guests that we're going to bring to you in 2026. And if you have a guest that you want us to bring onto the show that just closed a crazy deal or they have a great deal story, then definitely nominate them. Shoot me a message, shoot me a DM real quick. Would love to have them on to come on and really talk shop, because everything in the Deal Makers Club is really talking about the behind the scenes of the deal, the transactions, because every deal has a story. You guys already know, from working one-on-one directly with owners, working with other brokers, other agents, working with wholesalers, working with a seller, working with the buyer. There are a lot of places where the engagement with people, where deals can go sideways, where information can get dropped, the ball can get dropped, and it's always on a deadline. There's always a timeline on the backside of it, but there's always a story in the middle of it for those that are orchestrating the deals, for the investors, for the sellers, the buyers. There's tons of story. And that's why I tell people real estate is the ultimate people business. And really, when you get to the heart of it, where you're even talking about institutional deals and passive investing, that you have to be just that involved as on the active side in order to make sure you're doing it the right way. So today in the Deal Makers Club, we have none other than Austin and Jess Willingham, coming straight out of my home state, the great state of Alabama. Roll Tide always. And a phenomenal power team. When we talk about power team, and when you really look at where they stand right now, their team, they closed 110 transactions, not in their life, not in their career. In last year, 2025, they closed 110 transactions. When we talk about deal makers, they are shaking and moving across the state of Alabama, adding value across the board with buyers and sellers and making transactions happen. So with no further ado, I present to you guys Austin and Jess. Welcome to the Deal Makers Club today.
Hey, thanks for having
how's
us
it going?
on.
It's going great that you guys are here. Like, salute, congratulations. We connected in my Alabama investors group, and I'm seeing the transactions that's happening and going on behind the scenes. I'm more of a multifamily guy and really moving more into a passive investor, and like larger deals. But man, you guys have been crushing it, and it's great. So I always tell people, tell me what's not included in the bio that you give to people. But yeah, tell us a little bit about yourselves.
Yeah, I'll start it off. So, me and Jess both here were big names at New Western. We definitely started this whole thing at New Western in terms of buying and wholesaling real estate. Shout out to my New Western folks that might see this. They know I've got love for those guys. But New Western kind of helped us understand a certain way of doing it. We both were kind of newer into real estate beforehand. I was in a property management company for about 5 years, and she was more of a higher executive at AT&T. So before New Western, we didn't have years of real estate experience. So, really New Western kind of helped us build that foundation there. And we learned a lot, made a lot of money together, and obviously closed a lot of deals and rubbed elbows with a lot of different types of people in the industry there. Me, I'm from Chelsea, Alabama.
Okay.
Definitely not many people watching this probably know exactly where that's at. It's more of a backwoods kind of area, but I grew up a lot there, graduated high school there. So, got real estate attorney and realtor as the parent. So it's kind of in the bloodline to, take that route down the real estate route. And, I picked it up in property management, and then, New Western reached out to me. I gave them a shot, and it has just snowballed and grown like crazy since then for me. I'll let Jess kind of give her backstory as well.
Yeah, so like you said, I came from the corporate America world. It was comfortable, don't get me wrong. Had a great job, great career going there, but I just couldn't stop the feeling that, there's got to be something more than just sitting here doing the same thing, talking to the same people every single day, and then having a small retirement at the end of the day. So yeah, I gave up that really nice career to step into real estate. And man, I gave it my all, and it really paid off. I did a ton of research. I sought out New Western actually, and kind of helped grow the Birmingham office when I first came in. And they actually pitched me and my success when he was coming on. So
I'm glad she mentioned that. We did actually. We actually have a little competition on who made the quickest sale whenever we joined New Western. Technically, she did. Mine never closed. My guy ended up flaking on the whole deal. I did sell one the quickest, but it didn't close, so it doesn't count. So technically, Jess still holds that record, I believe.
At least with us too. Anyway.
Yeah, with us too. So.
No, that's awesome. And I think a lot of people listening in, corporate America, they're right now in the grind that Jess was talking about. And I think a lot of times it takes a leap of faith. It takes some courage to kind of leave that security that comes with corporate America, that comes with the guaranteed income, to go out and say, hey, I'm going to be an entrepreneur. I'm going to go and work in real estate, especially the last couple of years, and where transactions at like multi-decade lows. And a lot of people, you're having all the negative press and all the naysayers on YouTube. Everybody is doomed. We're about to crash again. And you have a lot of the naysayers that's out there. What was it like making that transition to say, hey, I'm coming into New Western into real estate, but then after that to really go out on your own independent? What was the mindset and the kind of the thought process to make that leap?
Yeah, I mean, I'll definitely jump on this question. I love this question. Before I started at New Western, I had a good little salary job, like $80,000 a year. At that property management company, I was secure. It was one of those things where you wake up basically kind of hating your day to day because it was a 9 to 5 and it was property management, which we all know, or if anybody knows or has any experience in property management, it's very like it wears you down type of work. Very
right.
A lot of problems that you're fixing every day. So it'll mentally exhaust you pretty quickly. But I hung in there for about 5 years, and eventually I had enough. And, of course, I learned a lot there as well. But I had enough one day, and just I ended up just randomly connecting with New Western. They had reached out to me, and I had like a little nest egg or whatever, not somebody who like came from money or had like a whole bunch of money financially, like free or anything like that whenever I stepped into the New Western environment. And basically it took me like a week to sell my first house, didn't close. I think we took a lag for about a month, and then it just like ever since then, I don't think I've really looked back. Like it was getting to the point where it was 5 to 7 closings a month on average with New Western. Then I closed $1 million Tuscaloosa package deal that was really good.
Nice.
And like it's snowballed from there. And obviously I was one of the main faces at New Western. It's just kind of like happened every week when I was grinding, and the results were happening. It just kind of blew up after a couple months of continuing to have the same success, if not more, every month. So that's what it was like for me. I'll let Jess kind of tell her side of the story. But
yeah, I mean, at the end of the day, it's all about believing in yourself and being willing to take that leap of faith. For me, it was a very similar experience from moving from corporate to New Western, from moving to our own company from New Western, because you still have that sense of security when you're working for a big firm like that that's nationwide. And so stepping into our own, we knew we could do it. We had our faith. We had faith that we could do it, and we just did it, man. It's a grind, though. You can't just expect things to happen. You got to be in it every day.
Yeah, there's no clocking in, clocking out when you own your own business. So,
and I think the saying goes, an entrepreneur will gladly work 80 hours for themselves so they won't have to go work 40 hours for somebody else.
Oh, yeah.
And it's a difference. It's a different mindset. It's a different grind. it's a different hustle, and you get punched in the face some days, and you wake up if
Yeah.
you go to sleep, and you're right back getting after it.
Oh yeah.
And you have to be resourceful. You have to manage risk. You have to be all things to your buyer, to your seller, and making it happen. Because a lot of times wholesalers, they get a bad rep. You know, they have a bad reputation. I've dealt with some great wholesalers, and I know some that couldn't shake a ARV out of a wet paper bag. And look at it like, dude, you overpaid for this. Like you got to get it locked up for less. And so
Yeah.
I think really perfecting your trade, like to salute to you guys, because it's one thing that a lot of people, they don't bring the consistency to the table. They give up too quick, and they don't perfect their business. So like right now with like, what's like the number one metric like that you track right now? Because clearly you got to have some systems in place. You got to have those key performance indicators, those KPIs that we always talk about in order to manage 110 transactions in
Yeah.
1 year.
Definitely. We check closings every single day. You got to look at those. You got to make sure everybody's on track. There's so many moving parts with each and every single transaction, and we're doing so many. So it's that daily touch on closings and then offers as well. Make sure we're getting in those offers all day, every day.
Yeah, I mean, shots on goal with the offer. If you're not making shots on the goal, then you're not scoring anything, you know? So we get told no 1,000 times a day from realtors, sellers, wholesalers. At the end of the day, we try to buy the property as if we were going to sell it to somebody else too. Like when we're buying it, looking at us as if we're buying it. So we're not just trying to, when we don't buy it, we're not trying to sell lemons to our people. We actually, our main folks are going to be like the repeat buyers. We'll get into that later, but closing is literally the very first thing on our calendar every single day that we track. Like it's actually the first thing on our calendar at 6, 7 o'clock in the morning, just seeing if there's any title issues. Because we don't just literally spend cash for these properties. What we do is use financing that's as good as cash. So making sure the lenders have got what they need, we got our scope of works done. Obviously touching the seller and making sure that the seller is still good, because I've had sellers just walk away from the closing table and I was like, man, did I just not talk to you enough during the closing? Like what happened there?
Right.
So just getting all the touches in and making sure things are lined up. And if they are getting delayed, making sure everybody's, on the same page, getting 2 to 3 to 4 different parties on the same page is like rocket science. It really is, especially these days in 2025. So
I can only imagine. That's per transaction.
That's correct. Yeah. Mm-hmm.
So I know like some people say in the industry that like, in order to get a deal under contract or even really to get people on the phone, like you have to touch them at least 7 times. What does that look like for you guys? You kind of see that with your business saying kind of the same thing?
So we do a lot of business with direct seller and wholesalers. Obviously, wholesalers already had those houses locked up. Those are way less touches typically. Way less. On a direct to seller deal, yeah, I mean, you're touching, sometimes you can get a seller to agree that week, after seeing the house and, going through the full process and doing all your due diligence on not just the condition of the property, but everything. And obviously, just about 100% of the situations, the seller expects to get more out of, before they reached out to you, they were expecting more money out of the property, usually almost 100% of the time. So, adjusting the expectations for them and kind of building that trust with them. An average number right now, I'd probably say, yeah, I mean, it is going to be around the 5 to 10 touch range. Of course, there's some that are less, those are the really good ones. And then there's some that, I mean, you'll touch way more than that over the several months, because we have our CRM does a drip campaign to where it's touching them when we're not even calling and texting them ourselves. So
nice.
That drip campaign is going to happen at least a few times a month. And that's all done by AI. Of course, that's a huge thing that I'm sure everybody is, but we're trying to integrate into our business to make it more efficient and obviously produce more income for the company. So yeah, to answer your question though, I'd say about average 5 to 10 times before we get to the closing table, and that's before any title issues are found or anything like that. So
No, awesome. No, thanks for sharing that. I know one of the things that, and I always encourage as I'm talking to like wholesalers, like, hey, what's your portfolio look like? Are you thinking about how can you keep some of these deals? What does that look like for you guys? Because I know we talked before, and you're building up the portfolio. How has that journey been for you on the ownership side and as an investor?
Yeah. So like with us at our old job, like our old company, we weren't buying near as much as like we are in the position to buy now. So really we're ramping up, like buying like ourselves. I know everybody probably thinks as us as they're wholesalers, right? But the difference with us is we are willing to buy the property if we have to, or if the property's really good, of course we're going to buy it ourselves. We're going to keep it.
Nice.
We're not really flipping properties these days because of the market. Our last flip was not a super big success in Crest Hill. I'll talk about the losses too. I mean, the losses are what makes you. Not everybody, you don't just win all W's. You got L's in there too.
Thanks.
So we're sticking with rentals right now, single family. Even like on the sales side, we rarely do anything more than like a triplex or a quadplex. If we get anything bigger than that, it was just honestly a one-offer. So most of our stuff is single family, but I mean, our most recent burr we cashed out really well on. Bought it in Inslee, 3-1,
Okay.
added a full second bathroom to it, did some other cosmetic updates, rearranged the floor plan very slightly, and we redid the wiring in the property.
Okay.
Shout out to my guys at Cobalt Construction. But basically got it rented for $1,400 a month in under 2 weeks in Inslee, 3-2 Bellevue Heights area. All in at like 96, and it appraised for 165. So we did a 75% cash out, and we actually just closed that one about a week ago. So anybody watching, we're looking to buy several more all the time, but like I'm really looking to buy a couple more in Inslee. I'm looking at one on that street right now. So anyways, that's kind of how, I mean, it's going for us in terms of buying and holding the properties for ourselves. We're looking to buy the range that we're going to keep this year up to 10. So it'll be a good growth year for us on that side. And
that is awesome
too. Like when you buy it yourself, you understand the deal way differently. Obviously, everybody knows who has actually bought properties. Every time you buy a property, your investor age grows. Like you grow wisdom every single time you burr and every single time you flip. So we just understand the deals differently because we do actually buy them.
Yeah, no, that's awesome. And it's actually my first property I ever bought in 2013 was Avenue K in Inslee.
Oh, gotcha. Cool. And, we got
several
closings on the Avenue G. Right now, I think Avenue M. Yeah. So we've got.
Okay.
Yeah.
Yeah, no, that's great. That is great because, at the end of the day, that's how you build wealth. And especially now, right now in the real estate cycle where we're at, high interest rates, low transactions are happening. Days on market are continuing to trend upward. This isn't the time to be a fix and flipper. It's the time to buy and hold, get great discounts, come in, do the renovations, and build up your rental portfolio. Have 2 or 3 lenders on your team ready to go that can refinance you and execute the burr strategy and build that portfolio up as the market continues to recover. And I know the administration is doing different things. I think they've taken the 50-year mortgage off. I saw something that's kind of going away. But now they're limiting institution buyers, which I think I saw some data with, I think Birmingham is like 12% ownership is by institutions in Birmingham. And I think Memphis and Atlanta kind of higher, up to around 25%. So 1 out of 4. But I think that's going to make it a great opportunity for investors to pick up more inventory that the big guys were coming in and just kind of scooping up over the last few years. How's that relationship been? Were some of the hedge funds and funds that were buying in Birmingham, or were those some of your customers back in the New Western days, or even today, that were buying?
So actually, we didn't really. The way institutional buyers buy, they can't really do it the New Western way. So we, since no longer, obviously being at New Western and have our own thing going, we've made a really good connection with a hedge fund type of buyer right now. And in just 2 months, we're probably closing somewhere right under 30 closings with them. More if it wasn't for so many title issues. Of course, they're able to pay a little bit more money for the property. They need a couple weeks more, or they need an extra week to close typically than a normal buyer would. But I mean, they're gobbling crap up, man. Like they're gobbling a lot of houses up. When they met me, they literally told me they want to own Birmingham.
Literally.
The houses we're not buying, they're going straight to them. And man, they got way more money than me or most mom and pop investors do. And just the way that they buy it is a lot lower risk for them. So they're able to do it at such a large scale. It's been a really good connection we've had with one as of recent, but we aren't just somebody with these institutional buyers just in our back pocket all the time. A lot of our main bread and butter clients are the ones that we built from the ground up. A lot of out-of-state investors that had no teams when they came to me. I helped build their property management companies, their hard money lenders, their DSCR lenders, the title companies, other contractors, most importantly, my goodness. We help a lot of those guys who went and bought 5 to 10 houses a year. They scaled their portfolio through us, and they got most of that referral through us. Some of them 100% referred through us, and they still use those teams to this day to buy properties from us. So those are our main people. Like those are people we have really like real human connected relationships with. They aren't just people that we do business with. Those are the people we're giving the Merry Christmas, Happy New Year cards to. So all those people that might see this know who they are. But we're not just working with a large amount of institutional buyers, just a couple really good ones right now since going separate ways.
Okay.
Yep.
So how's the relationship been with you guys as a couple? Well, with a new addition on the way. Congratulations again, by the way. So how's that dynamic? I know how my wife and I, how we operated together, because when I was at work with the military, she was the one working with contractors, property managers, paying things at Home Depot over the phone. So she was the glue keeping everything afloat while I was kind of out of sight, out of mind. So how's the dynamic work with you guys kind of working together as a couple?
I'm going to let Jess jump on this one.
It was kind of an easy transition. We worked together for over a year before we started our not so professional relationship.
Yes.
So we were kind of able to integrate it pretty easily to our everyday lives, and it makes it so much easier when I can just look across the room and be like, "Hey, I'm at this number. Does this work for you?" Like I don't have to call and wait for this busy guy to get back to me. I can just holler at him at my house or something. It's kind of funny, even when we're mad at each other, we're still like texting back and forth like about business.
Oh yeah, the business doesn't stop, man.
Yeah. Still celebrating the wins, that kind of stuff.
No, that's cool, because a lot of times, you hear some people they can't work with their spouse. I actually, for one, I love working with my spouse. It was really when she kind of started helping and realized everything that I was doing alone. She's like, "Oh wow, I had no clue you were managing all this stuff that goes into flipping a house and doing multiple simultaneously and working a W-2 job." And so it's definitely great to see. And I think hopefully it inspires a lot of other power couples to get started, to get going, and just kind of understanding that what's possible when you're working together. Because guess what? Two minds working together is definitely better than one. Kind of talking about these deals, 110 transactions. Is there one that kind of stands out like, man, this was a crazy deal, like no one would ever believe?
Man, I have one with a not so happy ending. I could sit here for a while, honestly, and kind of name different ones, but this one obviously just like clicks when I think of like really sloppy or really disaster type of closing. It's the most entertaining. Obviously, there's a lot of people who are in this kind of business know like there's a lot of moving parts all the time. Some are just little nothing burger kind of things and whatnot. But this situation is just very unique. I've never had a situation like it, and I don't think I ever will again. It was a house in Inslee. It was not like a historical area, but it was an area with just a lot of really big houses over there in Inslee. What address of that? It was like an avenue. I think it was potentially Avenue I. It was, yeah. And it had It needed a lot of work. Ginormous house. Floor plan was screwed. It was beat up. It had profanity spray painted all over the walls. Had really tall ceilings. A lot of potential to the house, but there were a couple of nice houses on our street and the neighboring streets. Of course, there was a really bad house that people were living in right next door. Like, how is that a house even livable type of situation? But anyways, I had one of my out-of-state guys from Atlanta pick it up off of me, just off of a phone call one night. He didn't even go do any due diligence at the house. It was just a trust kind of thing. It wasn't one of my like big repeat buyers or anything. I think that was like his second house he had bought from me. He had put it under contract one night. And I'm not going to name drop any other folks in this thing, but basically he had put it under contract one night and come up on closing day, man. He just decided that the, I guess BPO appraisal he had gotten on it didn't work out for him. So he was just going to back out of the closing and lose his earnest money. And of course that was devastating. At the time we were in Tennessee in Gatlinburg when it happened, literally like on the strip. Like, I'm taking that phone call right there, you know, kind of going through it, contacting my team about it, letting them know what's going on. And we, you know, after we mutually released with that guy and terminate it, we had to do a price reduction too for that guy, by the way. After we mutual released and terminated him from the deal, of course, we went and tried to resell it again for that seller that's in that situation,
Right.
that we were direct to seller on. And we had sold one of their houses like one street over too. So they had already built some kind of trust in us and seen that we could perform. Well, it goes, I sell it again. I sell it to another person. I end up selling the house to another person. And we went on like a company trip to Puerto Rico. And I wake up one day during the closing, this buyer backs out on closing day. 2 buyers back to back on 2 different deals in a 2-month period back out on closing day. Their whole thing about it was they just found a better deal. And we're talking $7,500 earnest money here. Like, we're not talking like $1,000 to $2,000 earnest money. We're talking about each buyer, you know, walking away from $7,500. And yeah, we didn't end up closing that deal, man. No one got paid. No one got anything besides a legal fund from, you know, whatever earnest monies were collected after the seller was taken care of. So that was probably the craziest. We still to this day, I think of that as like the cursed house. So, you know, that's probably the craziest story that will always stick with me, but there's so many other ones that, I mean, I could probably come up with, but I'll lead with that one. So.
Yeah, no, I think that's a good one because a lot of times people don't understand the grind, like the transaction, like the deal doesn't close till the wire hits the account.
That's right.
You know, not even till the ink is signed because, you know, there's still transactions and balancing and everything. So until the wire hits, it's not closed. But no, I think that's the thing. Like things happen, and you have to be prepared for that. But I think, you know, we're just going through and really talking about that deal and adversity. Like, how's the mental side for you guys? How do you guys manage the stress that, you know, I can only imagine, you know, you got your own fix and flips going on. You got transactions that are in the pipeline. You got people that you're trying to help them get their crew together to rehab a property you already sold them. So how do you guys kind of manage the stress and within the relationship and all of that? How do you do it? Because that's a lot.
We've got systems in place and softwares that help us kind of organize a lot of the things, but it really is just like sometimes you're running around like a chicken with his head cut off. I mean, it's just not something you can just avoid. I mean, there's always going to be chaos. I think her and I both thrive in the chaos, though. I know, like, I really buckle down and perform my best in the chaos. I don't think there is really any secret answer of how we maintain the stress. Like, you just deal with it. And that's one of the things that you take on when you own your own business and you're doing this many transactions and you're obviously touching this much money. So, you know, softwares, systems, and teams. You know, we've also got 2 kids. We own a property management business, just to add on top of all of that. So, you know, really organized daily calendar is one start. And like I said, super good softwares that can kind of track a lot of these things for us. And honestly, just getting in the thick of it, in the deep end, and just diving in. I mean, there's not really any way to avoid the stress. You just got to grind through it. So.
Yep, no, I think that is the goal, and it's great that you guys are building up that rental portfolio where eventually you can step back from the business and it can look back at your empire and the wealth that you built. So, kind of for you, as we kind of wrap up, what's the ultimate goal? What can we expect to see from Austin and Jess in 26, and kind of where do you guys see yourself 5 years from now?
I'll let you take that one, and I'll cap it off.
All right. Obviously, we're going to scale, right? We did 110 last year. We're going to do 110 more this year, because all we're doing is learning from these experiences. So we're just going to build on it, expand our portfolio, expand our family, and go from there.
Yeah. I mean, number wise, of course, I'm always, I think for the last 6 to 7 years of my career, I guess is what I'll refer to it, since getting in real estate investing. Every year I've had a goal to bring in more income or, climb the ladder, however you want to call it. This is our first year of being actual real, because under the umbrella of what we used to be in, we were still business owners. It's just a lot different. Now being like true business owners, it all, comes down to us. I want to say a number with the current way we're buying properties for ourselves, and then all of our buyer relationships that we've taken on. I mean, I don't see why we couldn't get closer to 200 with the way things are going right now. I think we're approaching 20 closings after yesterday for January. So that's between houses we're buying and that we're wholesaling off. So, it started off pretty good. I mean, the most closings I'd ever done before last month was like 12. And last month, of course, we went over that. And now we're going to, beat that record again this month. And I'm just hoping we can continue to stack that. And it's only possible with the teams. It's not doesn't happen just right here between these two people. We do obviously do a lot, but our lenders, our contractors, our title companies are, man, they put up a lot to do business with us. And we usually do 99% of everything with one title company in downtown Birmingham. Top tier title. Anybody listening to this, I highly recommend them. Whitfield is, a great real estate mind, and Brittany and Jenny are both the glue keeping it all together over there. They're title agents, so highly recommend them to anybody. But I'd say probably 200 units unit wise. Revenue, I mean, somewhere close to $1 million is probably what we're going to say. Put it up there, the bar really high, see if we can hit it. I mean, we've been hitting it for years in a row. So
Let's go.
we're going to make it happen this year. But yeah, that's probably the goal in a nutshell right there. And of course we got third child on the way, so that might throw some bumps in the road, but we're going to also have a goal of, growing to be great, even better parents for our kids and the family. So
Oh, that's great. And I love the financial goal, but really the whole person concept and really the family aspect of it. And that's what we do it for. You build wealth to take back that time, to have the time, the freedom to travel, spend time with family and do those things. So no, I think you have the right mindset and are definitely on the right path.
oh yeah.
That's all I have for you guys. It's phenomenal. I thank you guys for coming on and kicking off 2026 with me. I couldn't think of a better couple to have come on and really talk about all your success and everything that you're doing across the state of Alabama and the deals that you're making happen. And if you know, of course, if you run across some multifamily opportunities, definitely would love to for us to connect and do a little business together as well too. And what's the best way for somebody that may be thinking about selling a single family? What's the best way for people that are looking to maybe connect with you?
Yeah, so looking to buy or sell, obviously you can I handle more of I do both. I do acquisitions and dispo. Jess here does specifically acquisitions, and we have an acquisition manager now. So of course on Facebook, all of our stuff is right there on our home pages, but we've got our website, hams with an S, hamsmovebham.com. You can go on there. If you've got a property, you can submit the form there. It'll come straight to our emails, our text message. We'll see it right there. The whole team will, and we'll have somebody jumping on it right away. Speed the lead type situation. And of course, I do get blown up, every day with phone calls and texts. you can call me or text me. I do have a New Year's resolution of getting better at responding to DMs and text messages. But basically 205-908-7734. Call me, text me there. Email is pretty simple. Sales@hamsmovebham.com, acquisitions@hamsmovebham.com. Either way you send it, we'll get it. And buyers that are looking to buy out there, we're probably touching 30 to 50 deals a month between all the different ways we get our deals, PPC, PPL, mailers, the referral that you can't just build a referral overnight, so that takes time to build. But we're touching about 30 to 50 deals a month for anybody who might want to get an opportunity at buying a good property from experienced wholesalers who will buy their own product. So.
No, I love it. I love it. Definitely reach out to Austin and Jess if you're looking to get deals in the Ham in Birmingham. No, I appreciate you guys again coming on, and look forward to bringing you back in the future. And of course, with a whole lot more transactions under your belt, and hopefully all and only good stories from here going forward.
That's right. I'll have some referrals for you on the next episode if you don't have anybody lined up.
All right, let's go. Thanks again, guys.
All right. Thank you. See ya.
Bye. Yeah, no, that was great. No, shout out to Austin and Jess, that phenomenal power couple, 110 transactions in 2025. If I don't know, you got to stop making excuses. Like, there's people out here crushing it, doing what they want to do. You just got to figure out, what do you want to crush in life? What do you want to be great at? And start putting forth the effort, start putting in the time to make it happen. And you'll be good to go. For those not on LinkedIn, one of the most recent articles, I shared it with you guys, that just dropped for you to go and check out. 2026 most important retirement signal just came out and dropped. So there was a San Jose multifamily acquisition, the largest on record, $323 million apartment acquisition. I dive in on just what that actually means. For when we start talking about investors and what's happening out there, what does that actually mean to the market, and how the California market is rebounded, and just where market rents. So that was a 650 unit apartment, luxury apartment complex in San Jose. And earlier in 2025, there was a 948 unit Park Kylie that sold for $370 million. So there's money transaction. The big boys, the institutional buyers, they're moving and shaking in these markets. But the same thing is that, guess what? What if you owned a B class or C class apartment 2 blocks down the street, and you were supporting workforce housing, or had affordability housing? Guess what? You may not be charging the average San Jose rent of $3,190 a month, but maybe you're getting $2,000 for a B or C class property. So the thing is, you want to look at what are the institutional guys doing, and how can you align your money where you're looking to invest in passive institutional deals, or you're looking to pick up active acquisitions for your own portfolio that you're going to manage and run, that are somewhere within the vicinity. We call it the path of progress, and that's where you want to end up being. And so just understanding, you can dive into more of the details in my analysis on what I think that means for the California housing market. And just for those looking at retirement planning and overall diversification, what does this type of transaction mean to you? And then you can go through and look at all the other newsletters. I usually drop 2 articles a week. I talked about Silver Springs acquisition outside Washington, D.C. that just happened, and the things that's happened, because right now real estate is starting to bottom out. That we're starting to see the big guys, they're coming in, they're looking to acquire. They're acquiring these new multifamily units that are 1, 2, 3 years old, acquiring them for less than replacement costs, 20 to 30% below where they were at the 2022 evaluations. And guess what? You should be looking at how you can align your investments and everything that you're doing as the same way where the money and the capital is flowing. So make sure you guys follow me on LinkedIn, connect, subscribe to the Capital Brief, where I'm breaking down all these institutional moves and helping you become a better steward and take back control of your capital and your investments. So that is it for this week. Next week, I think I'm going to be on the road, so we won't have a live session, but we'll have one coming up the following week after, diving into more deals and more closings with top tier operators that are making deals happen across the United States. And then if you know anyone you want to nominate, or maybe you closed a recent deal that you would love to come on the platform and share, would love to have you guys come on. And then if you're looking at doing like a 1031 exchange, one of the things that we are really doing and doubling down on the education in 2026 on the 1031 exchange process and the Delaware statutory trust process with deferring those capital gains into institutional real estate deals. And so if that's you, would love to have a conversation and see how we can help make that exchange happen and help educate you on the pros and cons and help you take back control of your finances. That's it. I'm Johnny Lynham. This has been the Deal Makers Club, and we'll see you on the next show. Have a great week.